Hi, I'm Luke from Disciplined Trader, and in this video I want to answer the question most trading newcomers have: how much can I make trading the Forex and Indices markets? So unfortunately, there isn't a simple answer to this question. How much money you will make from trading depends almost entirely on your trading approach. Fortunately, we can break it down to analyse the factors that can affect what return you may see from your trading. So the factors in question are your strategy, trade frequency, your account size, and your risk appetite. Each of these aspects of your trading can affect your potential returns. Let's start with your strategy. Strategies come in all shapes and sizes. At the core of each strategy you have two important pieces of information. These are the strategy win rate and the average risk to reward for the trades taken with that strategy. Using these, we can make estimations on what you would likely see if you were to continue trading this strategy. So let's look at an example to illustrate this further. Here we have two strategies, Strategy A and Strategy B. Strategy A has a win rate of 65% and an average risk to reward ratio of 1.5 to 1. Strategy B has a win rate of 30% and an average risk to reward ratio of 5 to 1. Both strategies will be risking 1% of their account per trade. Now we can use these numbers to estimate what return we may get over, say, the course of 100 trades. But before we do, just looking at these numbers here, which do you think will have the higher return? So let's proceed. Starting with strategy A, we need to know how much our winning trade will make. If we are risking 1% per trade, then we stand to make 1.5% if the trade wins, as the risk to reward ratio is 1 to 1.5. So we know 65% of trades win, so 65% of 100 trades is 65. 35% of trades lose, so 35% of 100 trades is 35. So if 65 winning trades each make 1.5%, we can times 65 by 1.5 to get 97.5. So we make 97.5% from our winning trades. Now we need to calculate how much we lose from our losing trades. We have 35 losing trades, each losing 1%. So we can do 35 times 1 to get 35. So we lose 35% from our losing trades. Now to get our overall return, we need to take our return from the winning trades, which is 97.5%, and minus the amount we lose from the losing trades, which is 35%, to give us a total return over the 100 trades of 62.5%. Now let's do the same for strategy B. Again, we are risking 1% per trade, so that means we stand to make 5% on our winning trades, as the risk to reward ratio on this strategy is 5 to 1. 30% of trades win, so 30% of 100 trades is 30 winning trades. 70% of trades lose, so 70% of 100 trades is 70 losing trades. If our winning trades each make 5%, we can times 30 by 5 to get 150%, so we make 150% from our winning trades. Now we need to calculate how much we lose from our losing trades, as before. We have 70 losing trades, each losing 1%, so we can do 70 times 1 to get 70%, so we lose 70% from our losing trades. Now to get our overall return, as we did before, we need to take the return from our winning trades, which is 150%, and minus the amount we lose from our losing trades, which is 70%, and this gives us a total return over the 100 trades of 80%. So we can see from the overview of both strategies that even though strategy A has a higher win rate than strategy B actually has a higher return than strategy A. Let's move on to trade frequency. Some of you may be asking, what is trade frequency? And it's quite simply the average number of trades taken within a specific time period. For example, a strategy may take 20 trades on average per month. So the trade frequency for that strategy would be 20 trades per month, or 5 per week, assuming that there's 20 trading days in a month, or 1 per day, and so on. Following on with our example, we know strategy A has returned 62.5% over the 100 trades, and strategy B has returned 80% when both risking 1% per trade. However, it takes 4 months to get 100 trades using strategy A, and it takes 12 months to get 100 trades using strategy B. So over the course of the year, strategy A actually returns 187.5%, as it returns 3 times the 100 trade estimate we made earlier, whereas strategy B still returns 80%, as it takes a full 12 months to get the 100 trades. So now the tables have turned and strategy A actually gives us a better return, as although the return over a set number of trades is lower than strategy B, it takes 3 times as many trades over a year, which multiplies its return potential. It's important to know the trade frequency of a strategy, so you know what sort of time period you are looking at to get the return you are estimating. Okay, so let's move on to account size. People start trading with accounts of all different sizes. Some people may begin trading with a few £1,000s, some with tens of thousands of pounds, and some people may even start with hundreds of thousands of pounds. But how does this affect the returns you can make? Let's continue with our example. So far we know that over the period of a year, strategy A has returned 187.5% and strategy B has returned 80%. However, the trader trading strategy A has an account size of £5,000 and the trader trading strategy B has an account size of £30,000. So if we apply the percentage returns to their respective accounts, we can calculate how much money each has made over the year period. The trader trading strategy A has made a return of 187.5% on his £5,000 account, so 187.5% of £5,000 can be calculated by multiplying 1.87 by £5,000, which equals a return of £9,375. The trader trading strategy B has made a return of 80% on his £30,000 account, so 80% of £30,000 can be calculated by multiplying 0.8 by £30,000, which equals a return of £24,000. So we can see, even though the trader trading strategy A had a higher percentage return over the year, trader B has still made more money because he had a bigger account size to begin with. And finally, let's look at risk appetite. Risk appetite is simply the amount a trader is willing to risk per trade. It is usually a certain percentage of their account. So far in our examples, both strategies have been risking 1% per trade. However, the trader trading strategy A has decided they are willing to risk 4% on each trade taken. The win rate is still the same, and the risk to reward ratio on the strategy is still 1.5 to 1. So if the 1 on the ratio represents strategy A's 4%, then we need to multiply 4 by 1.5 to get the return per trade. 4 times 1.5 gives us 6, so trader A now stands to make 6% on winning trades and lose 4% on losing trades. We know strategy A takes 300 trades per year, so 65% of 300 trades win, which gives us 195 winning trades. 195 times 6 gives us our return from winning trades, which is 1,170%. 35% of 300 trades lose, which is 105 losing trades. 105 times 4 gives us our loss from losing trades, which is 420%. So 1,170% minus 420% gives us our new total return for strategy A, which is 750%. A 750% return on the £5,000 account for this strategy equates to a £37,500 return. So even though trader B had a much bigger account, trader A made more money over the year because he was willing to take on more risk. Now I must mention here that I'm not saying it's a good idea or a bad idea to risk 4% per trade. I'm merely trying to demonstrate to you how your appetite for risk can affect the amount of money you make from trading. Keep an eye on the YouTube channel, as I will be making a video in the near future to help you decide how much to risk per trade. I hope you found the example we just went through to be beneficial. I see a lot of traders that get told the strategy is successful and just start running with it. It usually ends up being thrown away by that trader shortly after, as they lose confidence in it, and I'm not surprised. If you don't know the technical information about the strategy you are using, how do you know if the results you are seeing are in line with your expectations? How can you have any expectations of it? The strategies using the examples are not real strategies, but let's pretend for a moment that they are. The trader trading with strategy B might go through a pretty long streak of losing trades, as it only has a win rate of 30%. If the trader trading this strategy doesn't know this, and has just been told that it's a profitable strategy, they could very easily lose all confidence in it when they hit this losing streak, and they would miss out on the potential returns that it has. I will make a video in the future on how to calculate the probability of losing streaks, so keep a lookout for that on the YouTube channel. So hopefully I have demonstrated to you that answering the question, how much money can I make from trading, is not a simple answer. You need to consider the factors we looked at previously when estimating any potential returns from a trading approach. If you're brand new to trading, then I would urge you not to concentrate on returns for a while. Instead, focus your efforts on learning about the markets. Spend time with a trading platform and become competent using it. Find or develop a strategy that suits you and that you're happy with. Maybe demo trade that strategy for a while. Then start with a real money account, but keep the stakes small so you can slowly build up your confidence and your discipline to the point where you're ready to progress. New traders often have unreal expectations from trading, but if you set your expectations correctly, you will find your trading will progress with much less stress and much less frustration. So as I said, over the next couple of weeks I will be uploading more videos to the YouTube channel, so subscribe to the channel if you found this video useful and you want to see more. Topics I'll be covering will include how much should I risk per trade, how to estimate the potential returns from your strategy, and how to calculate the probability of losing streaks. Also, if there are any other topics that you'd like me to cover, just let me know and I'll happily do so. So thank you for watching this video. Please subscribe to the Disciplined Trader YouTube channel for more trading videos. You can also visit the blog where you can find the Disciplined Trader Academy, where I am building a collection of video courses to help traders of all levels improve their trading. You can also follow me via the Disciplined Trader Facebook and Twitter pages. Thanks again for watching, and I hope you all have a good trading day.